Well, the markets have closed. Time for market analysis for this week. And joining me is Ewin Chui, a research analyst at Dyer and Blair. Many thanks, Ewin.
You're welcome.
Well, this conversation comes on the background of the ongoing challenges we continue to see around the NSE and the all-share index. We've seen the 20-share index this week is actually down by 1.14%. It's closing off at 3,705.36 points. Perhaps, what are the market jitters right now?
It's not so much jitters. I think we've come to what is called a next dividend period. So most of the banking stocks had their book closure on the 30th, actually. So this is like the first week since that closure. So the price is just correcting to where it should be now after that adjustment.
All right.
Yeah.
Because I asked this because we actually saw last week it was at about 3,800, and it had an upward trajectory. Now we're going down. Is there a challenge with the markets really?
I think you could argue that there is a fundamental issue that has rolled over from what happened last year. We know about 37 companies that are listed, either recorded declines in profits or losses. So that has now registered in terms of their full year reporting. So there's a bit of a correction around that. But then again, we have to highlight that there was an upward momentum that was created by the handshake. And then it was somehow...
The famous handshake.
The famous handshake.
Which has now caused a star across the country.
Yes. And now there was a bit of augmentation that came from, the banking stocks giving dividends that were fairly attractive given the entry point at that point. So now that the book closure has occurred, which for most of the stocks was 30th of April, now the prices are correcting.
All right.
Yep.
So the markets are definitely correcting.
Yep.
And Edwin, let's take a look at the top movers this week. We're seeing Safaricom moving just about 27 million shares, KCB 3.2 million, Equity 1.7, Barclays Bank 819,000. Let's talk about Safaricom. There's, of course, the buzz around them trying to innovate a new app that will be able to make people chat using the mobile money platform, that being M-Pesa. And there's been a lot of innovation really around Safaricom, and it remains as one of the most capitalized stock on the exchange.
Yep. So I think one of the challenges in the market is that there hasn't been many investable assets, and part of it is because of the challenges we've had in the banking sector, especially because of the interest rate cap. And then, of course, the effects of last year, the drought and the extended political season. So that is part of the reason why Safaricom has really gained in terms of market capitalization. But then talking about Safaricom itself, everyone agrees that the fundamentals are good, but now there's a question of what comes next. So in my view, Safaricom needs another big thing that is going to justify the premium on its valuation.
All right.
Yep.
Interesting. Let's talk about the top gainers this week. We are seeing some surprises there. WPP Scan Group among the top gainers, up by 12.3.5%. Mumia's Sugar not doing so well in terms of its valuation, but the stock is on the gainers. It's actually up 6.25%, and the stock valuation is at 80 cents. What's the story around the sugar sector really?
So the sugar sector, speaking about Mumias, is more of a speculative play right now. There are still a lot of issues that need to be solved in terms of debt, in terms of payment to farmers. And a lot of these issues require so much consensus build-up, which I guess takes a bit of time. So that's the issue with the company. Not fundamentally sound right now, so we have to continue waiting for a bit of a turnaround in the way the company performs.
And looking at the top losers, Chui, I'm seeing Deacons East Africa, which, as we know, had issued a profit warning. And the stock is down 16%, valued at 2 shillings and 50 cents. NIC Bank also not doing well. It's down 10.98%. Barclays Bank down 10.45%. But the big news, of course, would be around Barclays. We've just seen news of them actually letting go of KPMG audit firm, and of course we know Barclays Africa Group is rebranding.
Yeah.
But what are some of the fundamentals around this particular stock that might have led it to the losing counters?
It's not so much losing, it's more of a correction after the book closure on the 30th. Fundamentally speaking, the stock has actually been a bit expensive, about 10.5 times earnings. So the main reason why it actually went up was because of the dividend play. But you're right, going forward, there is a question about the transition to ABSA and whether that brand is going to be accepted here, considering that, you know, it hasn't been here before.
There's a lot of skepticism right now.
Yes, and then there is a question of whether now this means that Barclays management in Kenya are a bit more agile to take up strategic positions that they were not able to before because of a lot of regulatory approval process.
All right.
Yep.
And what are your closing thoughts around Deacons East Africa? Is it a lost market for them in Kenya?
So Deacons had the problem of Nakumatt closing down. Nakumatt was facilitating a bit of foot traffic to them.
As we did see Two Rivers, the delay of opening Two Rivers also affected them.
Delay of Two Rivers as well. And of course, the interest rate cap affected them because if people don't have money, then they're not shopping. And then now what they did in the last year is that they actually sold their Mr. Price franchise back to Mr. Price Group. Mr. Price was contributing more than 50% of their earnings. Right. So the big loss is partly because of that.
All right.
Yep.
Many thanks, Chui, for your analysis.
You're welcome.
Well, time to take a look at Markets 101 for this week. Well, it's time for my favorite segment, and that's the question on the street. Let's take a listen in on what the Kenyans are asking on this week.
My name is Wangila Wabomba from Bungoma County. I would like to know what is delisting.
A delisting is the opposite of a listing. It pretty much means buying off publicly listed shares and transferring them back to private ownership.
Well, I hope you've been satisfactorily answered, and keep asking the questions, and our analysts will be responding. Well, it's time for us to take a look at historical fact for this week. Well, that's where we bring the show to a close for this week. We do hope that you've learned a lot from the Building Africa Financial Markets seminar, just listening to some of the key speakers who have been sharing the trends we're seeing in the markets. Well, on behalf of the team, remember, you can always engage with us on social media using our Twitter handle at KT News, or you can tweet me at Agina Abi. And you can also follow us on Facebook under the Trading Bell name. From us, it is bye-bye for this week. See you next week. Many thanks.